Hello my dear students, welcome to my channel. I am Ganesh or Excel in Accountancy. In this video I am going to explain the accounting process of 1 year in the business. Accounting process. Before this, total concerns are divided into two categories. One is small business unit, next one is big business unit. What is small business unit? Where there is limited transactions are occurred into day-to-day life of the business. Such type of business unit is called small business unit. Only limited transactions are occurred. Whereas in case of big business concern, a number of transactions, unlimited transactions are occurred in day-to-day life of the business. Such type of business unit is called big business unit. Now I am taking the first one, small business unit. Accounting process of small business unit. The profit or loss of the business, the financial position of the business is ascertained once in a year. A year consists of 12 months. This 12 months period is called accounting period, accounting year, financial period, financial year. Every financial year starts from 1st April and ends with 31st March. You take example of last year. Last year 1/4/2020 ends with 31st March 2021. The very first business transactions related to small business units are entered in where are entered in the first book. That first book is called journal. Journal is a day book. Day-to-day transactions are recorded in the first book. That book is called journal. April 1st transactions are entered in the journal. After completion of April 1st, again what will start? 2nd April. 2nd April transaction is also recorded in where? Also recorded in the journal. After that, 3rd April transactions also recorded in the where? Recorded in the journal. The process of recording the transaction in the journal is called journalizing. Like this, 4th April transaction is also recorded in the journal. 5th, 6th, like this, up to 30th transaction of April is also recorded in the where? Also recorded in the journal. After successful completion of 1 month, the transactions which are entered in the where? Entered in the journal are shifted to another book called ledger. Ledger is a principal book. In this book, a number of accounts ought to be maintained. That is, the classification of work will be undertaken in the ledger. In journal, all transactions are recorded. Transaction related to purchase, transaction related to sale, transaction related to cash. All mixing transactions are recorded in the journal. It is not possible for us to know the position of the respective account in the journal. So there is a need to what? There is a need to classify the transaction to know the positions of what respective account in the ledger. You can shift the transaction daily. After completion of every day, you can shift the transaction from journal to ledger, or once in a week, or once in a 15 days, or once in a month, you can shift the transaction from journal to ledger. The shifting the transaction, the process of shifting the transaction from journal to ledger, that process is called posting. But posting of work of respective month should be completed within that respective month only, because every month ending we are going to find the balance. What is balance? The difference between the debit total and credit total of respective account in the ledger. So balances of accounts are finding every month. Now after this, what will start? Again, after April, May month. In May, 31 days are there. 31 days of transactions are entered in the journal. In 31 days of transactions are shifted to where? Shifted to ledger. Like this, after May, June, July, August, September, October, November, December, January, February, March. In March, 31 days are there. The March total transactions also recorded in where? Also recorded in the journal. Shifted to where? Shifted to ledger. Like this, we find in the journal 365 days or 366 days of transactions of entries we find in the journal. In the same manner, in the ledger, 365 days or 366 days of posting are available in the ledger. After completion of successful 1 year of journalizing and posting, at the end of the accounting period, that is on 31st March, one statement is prepared. The statement is called trial balance. I already said, in the ledger every month we are finding the balance. The balance of first month is shifted to next month. The next month answer is shifted to third month. Like this, we are shifting the respective balances of respective month to the next month. On the basis of 12th month answer of ledger, we are preparing what? We are preparing one statement. The statement is called trial balance. Trial balance is prepared to know the arithmetical accuracy of books of account, whether we maintain journal correct or not, whether we maintain ledger correct or not, whether we followed the double entry system of accounting correct or not. To know that one, we are going to prepare one statement. The statement is called trial balance. In trial balance, we find a number of what? Number of columns. Out of those number of column, debit column and credit column is important. If the debit total is equal to credit total in the trial balance, what we are assuming? We are assuming there is no mistakes in where? There is no mistakes in the journal, no mistakes in the ledger, no mistakes in the following the rules of double entry system. If the debit total is not equal to credit total, then there may be what? There may be mistake in journal, or maybe mistake in ledger, or maybe mistake in following the rules of double entry system. Before going to next process, we are rectifying that error. We are finding that error, detecting that errors, rectifying the mistake by passing rectification entries, and making what? Making agreement of what? Agreement, that is tally of trial balance, finding and ascertaining equal answers on both sides, debit and credit column. After agreement of trial balance, on the basis of this trial balance, we are going to prepare final account. Final accounts gives the final result of the business. The final accounts consist of what? Consist of 3 steps. Number 1 is what? Number 1 is preparation of trading account. Second step is preparation of profit and loss account. The last step is preparation of what? Preparation of balance sheet. Why the trading account is prepared? The trading account is prepared to know the gross profit or gross loss of the business. How much of profit is obtained or how much of loss is incurred by means of only by taking the purchases and sale of goods and services. After knowing that one, it is necessary to calculate the net profit or net loss of the business. What is gross profit? In simple, before reduction of expenses, whatever the profit is obtained, the profit is called gross profit. After deduction of expenses, after adding the income, we are going to ascertain the net profit or net loss of the business. The net profit or net loss of the business is ascertained by preparing one account. That account is called profit and loss account. It is ascertained net profit or net loss by means of preparing what? By means of preparing profit and loss account. So profit and loss account is prepared to know the net profit or net loss of the business. After knowing the net profit, after knowing the net loss, the last step is preparation of what? Preparation of balance sheet. So balance sheet is a statement. This statement is prepared to know the financial position of the business. It consists of what? Consists of liabilities and assets. So it is prepared to know the financial position of the business. After preparation of financial statement, that is position statement, the financial statement consists of 2 statements. Income statement. Income statement consists of preparation of trading account and profit and loss account. And position statement is nothing but preparation of what? Preparation of balance sheet. So after successful completion of preparation of final account, the final result of the business results, that is profit or loss, financial position of the business is intimated to the users. The users are also known as decision makers. Users are 2 types: internal users, external users. Internal users are more ability in knowing the result of the business, whereas external users are less ability in knowing the result of the business. The internal users includes the management. The management needs the 2 important items. It is cost of goods sold and profitability is needed for internal users for the purpose of what? For the purpose of planning, controlling and decision making. So internal users includes business unit managers, stores manager, plant manager, line supervisors, or comes under what? Or comes under internal users, whereas external users includes what? Includes potential shareholders, banks and financial institutions, stock exchanges, trade associations, labor unions, or comes under what? Comes under external users of the business. So after preparation of final account, we are communicating the last step in the process of accounting. We are communicating the result of the business to the whom? To the internal and external users for the purpose of decision making purpose. So this is the process of accounting in respect of what? In respect of small business unit. Now in case of what? In case of big business unit, it is not possible for us to maintain journal. Journal is a time consuming process. In journal we have to write the date, entry, narration, ledger folio, that is page number of ledger, debit amount, credit amount is recorded. It will take tremendous amount of time in preparing what? In preparing trial balance, in preparing the journal. If journal is delay, then what is? Ledger is delay. If ledger is delay, trial balance will be delayed. If trial balance is delay, final accounts are delayed. So we have to submit our final accounts file to the chartered accountants within a stipulated period on the basis of what? On the basis of turnover of the business. We are submitting our file to the chartered accountant for the purpose of audit purpose. So our auditor will not accept the file if delayed undertaken. To avoid that one, in big business unit, we are maintaining what? Maintaining in the place of journal, subsidiary books are to be maintained. Subsidiary books consist of what? Consist of 8 books. Purchasers book, purchasers returns book, sales book, sales returns book, bills receivable book, bills payable book, cash book, and journal proper. A number of, that is 8 books are maintained, 8 special journals are maintained in the place of journal to save time to complete the recording of transaction, update of transaction in time. We are maintaining what? Maintaining 8 special journal in the place of journal in modern system of accounting. So day to day, in case of big business unit, day to day transactions we are going to record what? We are going to record in respective subsidiary book every month. After completion of every month, we are shifting to ledger like this. April, May, June, July, like this. 12 months of transactions are recorded in subsidiary books, and 12 months of transaction were shifted to what? Were shifted to ledger. The first month of answer is shifted to next month in the ledger like this, shifting. By taking the 12th month answer, we are preparing what? We are preparing trial balance. Trial balance is prepared to know the arithmetical accuracy of books of account, whether we maintain subsidiary books correct or not, whether we maintain ledger correct or not, whether we follow the double entry system of accounting correct or not. To know that one, we are preparing one statement. That statement is called trial balance. After completion of trial balance on 31st March, on the same day, we are going to prepare final accounts. Final account gives the final result of the business. Final account consists of trading account, profit and loss account, and balance sheet. Trading account is prepared to know the gross profit or gross loss of the business. Profit and loss account is prepared to know the net profit or net loss of the business, and the balance sheet is prepared to know the financial position of the business. After completion of successful final account, we are submitting our files to chartered accountant, and after completion of audit work, the auditor is giving one report. That report is called auditor report. After that, we are printing the annual reports, brochures, submitted to interested parties. Those interested parties are called users. We are communicating our results to the users for the purpose of decision making. So users are two types, internal and external, and internal and external users are using our results for the purpose of taking sound decisions in the business. So this is the process of accounting in respect of what? In respect of small and big business unit. Thank you, my dear students.